Hello and welcome to the new video, and in this video we will discuss the top 4 interview questions that may be asked for the risk analyst job or the risk manager job, and we will also discuss the model answers for each of these 4 questions. So let's start the video. If you are applying for the risk analyst job in the financial institution, then you would be asked to have a strong knowledge of the basic concepts about the risk management and the related concepts. First of all, your interview would be conducted by the human resource personnel. They will assess your personality and will ask the basic questions about your past and you can say the communication skills, and then you would be referred to the technical team of the risk management, and probably the team would consist of the risk managers or the head of risk management. It depends on the size of the organization or the institution where you are giving your interview. So the risk management team would expect you to have the strong knowledge of the basic concepts. So they usually start the interview from what is risk. Most of the candidates get confused and they do not give the right answer to this very basic question. So the model answer here is: risk is a possible adverse or negative event. Risk is not the actual event. Risk is the possible adverse or negative event that might occur in the future. So you should understand this, and then you have to say that the risk is a possible adverse or negative event, the occurrence of which, if the risk actually occurs, may cause the losses to the organization, such as the financial loss, reputational loss, customer claims might be increased, then there might be some compliance losses or regulatory losses, etc. So if you are giving your interview in a financial institution, like for example in the payment gateway organization or a banking organization, then you can replace this term with the organization. Like for example, if you are giving the interview in the bank, then you can say the bank here instead of the organization, and this will add the relevance to your answer, and the interviewer would see you as you are linking the answers with the organization where you are actually giving the interview. So let's move on to the question number 2, that is the types of risk. Before discussing the question 2, I would request you to please subscribe this channel and share the video with your friends and colleagues who are doing jobs in the risk management domain. And if you like the video, it will support this channel, and please share the video as well. So the question number 2 that might be asked by the risk management team is: what are different broader types of risks that an organization face? You have to listen very carefully. The question that may be asked here, the term broader is mentioned, so your answer should be according to the question that is asked. So the model answer here is: there are different types of risk that the organization faces or the financial institution faces, and those broader categories include the financial risk, operational risk, business risk, compliance risk, credit risk, liquidity risk, adverse media, or a reputational risk. As the term broader is mentioned, so you have to mention the broader categories. There might be subcategories as well, but as I said earlier, you have to carefully listen the question, and the question states the broader types of risks. You may also be asked what are different types of risk, and please elaborate each one of them. So for the financial risk, you need to know that the financial risk is a risk and the occurrence of which would cause the outflow or loss of financial resources such as cash or the funds. Operational risk, for the operational risk I have uploaded other videos in more detail. You can watch those videos on this channel, and those videos are very helpful to discuss the operational risk, because operational risk is a very important area of the overall risk management, and the people apply for the jobs for the operational risk manager positions. I have uploaded the related videos, interview questions, the definition, examples, so you can watch those videos as well. But here, for your understanding, operational risk is the risk of losses resulting from failed internal processes, internal systems, people, or the occurrence of some negative external events like earthquake or the floods, etc. So please watch the operational risk videos and compliance videos on the channel, and you would get more insights to the concepts. Business risk is the risk of loss of losing the business or the customers, and this might be because of the increased competition or the decision by the senior management to withdraw the business segment, etc. Compliance risk is the risk of a loss resulting from non-compliance with applicable laws and regulations. We know that every organization or institution has to comply with certain laws and regulations. So, if the organization does not comply with the laws and regulations, like for example, cybersecurity law or the cybersecurity regulation, anti-money laundering regulation, antitrust or anti-corruption regulations, or anti-financial crime regulations, and so on, so the compliance risk would arise. Credit risk is the risk where the customers do not pay back the loan or the amount they owe to the institution. Liquidity risk is the risk of shortage of funds, and if this occurs, then the organization faces the working capital issues. Then we have the adverse media or reputational risk. Adverse media means that any negative news might be reported by the media, and that would cause a reputational losses. For example, a significant customer might complain against the organization in the media channel, and if the media displays the news, so you can imagine what would happen. The reputation of that organization or institution would be lost. Let's move on to our question number 3, that is risk management. We have heard about the term risk management, but in most of the cases, candidates do not give the right answers to the risk management. What is risk management? So here is the model answer in front of you. I would request you to please subscribe this channel and share with your friends and colleagues, and please like the video to support this channel. So let's discuss what is risk management. If you are asked what is risk management, so you need to think logically, and you need to remember that risk management is an ongoing process. It is not a one-time activity. So the organization manages the risk on an ongoing basis, on the regular basis, or on a daily basis, and it involves the identification of risk sources. By risk sources, we mean the applicable laws, regulations, standards, guidelines, number one. Then internal policies, procedures, and SOPs would need to be identified. External regulatory expectations would need to be identified, and so on. After the identification of risk sources, risks are captured, and those risks are the existing or potential risks that the organization face, like for example, the non-compliance risk to the applicable laws and regulations, the cyber attack risk, etc. After that, the risk manager or the risk management team performs the risk assessment. You may be asked what is risk assessment, so you have to be very clear about the risk assessment as well. Risk assessment is the process of assessing the significance and likelihood of identified risks. By significance, we mean the impact, or you can say how much loss the organization would face if the risk actually occurs. That would be the significance, and the likelihood is the chances of occurrence of that risk. So if the significance is very high and the likelihood of occurrence of risk is also very high, then the risk would be classified into the high risk category, or the scoring would be the high risk score for that particular risk. So after performing the risk assessment, the prioritization of risks are done, and where the risk scoring is assigned to each individual risk. And after the risk scoring, one can easily identify the level of risk, that is whether the risk is high, medium, or low. Then based on the risk prioritization, the risk management process involves the development and implementation of risk mitigation plans, or the improvement of existing controls, because the risk might be very high because the existing controls are weak. So the organization may take the decision to improve the controls to mitigate the risks. So this is the model answer in front of you. What is risk management? First of all, identify the risk sources, capture the risk, perform risk assessment, prioritize the risk, and then develops and implement the appropriate mitigation plans or improve the controls to avoid the risk or to manage the risk. Let's move on to the last question, how to avoid and manage risk. I would again recommend you to watch other videos. I have uploaded other conceptual videos related to risk management, regulatory compliance, cyber security, etc. So you can watch those videos as well. and definitely those videos will enhance or increase your knowledge. So the question that might also be asked for the risk analyst job is how risks are avoided or managed in an organization. This is sort of a practical question, and if as you are applying for the risk analyst job, you need to know the answer. So here the question is how the organization will be avoiding or managing the risks that are faced by the organization on a regular basis. So based on the risk prioritization that we discussed earlier here, risk prioritization, high, medium, and low categorization. So once the risk prioritization is done or the high risk categories are identified, then the process owners means the departmental heads or unit heads or the persons or employees responsible to perform certain activities would develop and implement the appropriate plans and controls, because they are actually doing the job. They know better what operational difficulties and what matters they face on a regular basis, so they need to develop the implementation plans and controls accordingly, and they can get the insights and advice of the compliance and risk management team here. But the responsibility to develop the implementation plans and controls would be on the process owners. So the controls would be in the form of the development of policies, procedures, deployment of systems, enhancement of systems, replacement of systems or technology, etc. So once the controls are available and categorized, then the controls are deployed in the process where the risks are high. For example, if the financial reporting process of a organization is very weak, and due to the non-hiring of the experienced and qualified finance team, there is the major risk of fraudulent financial reporting. So in this case, the organization or the senior management would be hiring the qualified and experienced finance team and a chief financial officer or the CFO for the organization to mitigate the major risk of fraudulent financial reporting. And the hiring of qualified finance team and CFO would enable the management of finance issues and matters on a regular basis, and this will reduce the chances of occurrence of fraudulent financial reporting, because there would be the proper hierarchy involved in the finance department of the organization, supervised by the qualified and experienced finance team. So this was the model answer for how risks are avoided or managed in an organization. You can also think of other scenarios in the organization. I would be uploading similar videos in the future as well. For more clarity of the concepts, please subscribe this channel and share with your friends and colleagues so that they can benefit as well. And please like the video as well. Thank you for watching and see you in the next video.